to this week's weekly update. A lot going on in the market at the moment. We've seen a nice little rest from Bitcoin, which we'll jump into and have a look in a moment, and maybe seeing signs of the next leg up in the crypto market. So we'll discuss that as well. But before we jump into that, we'll just start off with a small bit of housekeeping. So we've got a lot of new members that have joined us recently. And just wanted to remind you that if you are looking for technical support, please email support@digitalwealthgroup.com.au, and then the coaching group will receive your request and can deal with it in the most appropriate way. So please make use of that resource. If we can get all the support emails heading to that one area, that is the best way where they can be watched closely and responded to quickly. All right, let's jump in and have a look at a few interesting things that are going on in the market. First of all, and unless you've been under a rock, you'll probably know that Ethereum fees have gone through the roof, and I can't see any change to that. If the price of Ethereum keeps going up, that's going to have a direct impact on the actual costs of doing things on the network. That's the price of being in a bull market. But what we've also seen off the back of that is competing chains take a bit of the attention in the space. So Binance Smart Chain, Polkadot, Cardano. Now, Polkadot and Cardano are probably less of a direct impact. Cardano is very much still in a development phase, and I don't think is anywhere near production ready. Polkadot, I've got to be honest, I don't know enough about the ecosystem to know how far advanced they are and what sort of things are being built out on that ecosystem at the moment. Binance Smart Chain is a little bit different in that it's a direct copy of Ethereum and can use all the existing Ethereum tools and code that have been developed to run the same applications and things on the Binance Smart Chain. Difference being Binance Smart Chain is a lot cheaper to transact on, primarily because it sacrifices security in lieu of speed. So it's gone for a faster approach, but that comes at the cost of being less decentralized. So that means that it can operate faster and cheaper, and that's proving to be the case. But what it's also doing is it's making it so that a lot of projects can be copied from the Ethereum network and dropped straight onto the Binance Smart Chain. And I don't mean that in a good way. I mean that in a bad way, where teams have spent years developing something and have a lot of intellectual property built into their products and the things that the code that they've produced, and someone can just go grab that because it is public code, go grab that and port it across to the Binance Smart Chain. And just because it's public code doesn't mean that it's not copyright protected and not and is licensed for them to legally take that copy. So it's throwing up quite a few issues where projects are being copied illegally and launched on the Binance Smart Chain. So just be very wary of things at the moment. A case in point is this particular one here, where Musical Beats, they've copied codes from Eula Beats on Ethereum and launched it on Binance Smart Chain, and then instantly the team has decided, oops, what's happened there? Okay, looks like we've jumped into a tweet. Sorry about that. Instantly, the team has had to cease and desist, essentially. So I'm assuming they've got some letter from Eula Beats company, and they've been issued a cease and desist. And they've done the right thing in this case. They've taken it offline. But so what they've said, oh man, why does that keep doing that? Let's go back. But they've basically said that the users can burn their tokens. There will be some loss of money. We'll be distributing the developer fund to compensate loss of money. there can still be a 10 to 20% loss. So just be mindful that if you are jumping on board these new projects on Binance Smart Chain, they do carry an element of risk depending upon whether they've been brought across in the right way, whether the team that originally done them on Ethereum has brought them across or whether they've been copied. And if they've been copied, have they been done so against the terms of the license of that software? So just keep an eye out for that. Once again, it's just because someone illegally copies something doesn't mean it's going to get torn down. It then becomes one of those situations where it's lawyers at 50 paces, and is it worth chasing someone and going through those legal costs to have them remove their software? So that's another side note, but just understand that that's usually the way it works in the corporate world. In the blockchain world, there's a few nuances that can change some of that, like anonymous teams. Who do you chase if the team's anonymous and things like that? So not a black and white situation, but just understand that that is happening, and there is some real hot competition between Binance Smart Chain and the Ethereum mainnet at the moment. So watch this space. There's bound to be some more fireworks going on from that. All right, just a quick side note. So a survey carried out by JP Morgan found that 1 in 5 investors at firms that don't trade in crypto say they're likely to in the future. Now, put as much weight as you like in surveys and how the data is depicted and displayed, but I guess painting this all with a broad brush, I think it's obvious that we're starting to see the doors of traditional firms open up more and at least have an awareness of Bitcoin and the fact that they can invest in it, and the fact that eventually they probably will. At what price will they come across and start buying Bitcoin? No one knows, but let's assume that it's going to be higher than what it is now. And what you find is a lot of these firms, when they do buy it, they're putting it on their asset books for a longer period of time than what the retail investor has in their outlook. So just a point of note, and good to keep an eye on these sorts of things and seeing what's going on in that space. Moving right along, Brave. If you haven't used Brave yet, Brave is a internet browser very similar to Chrome, essentially built on what they call the Chromium framework, which underpins Chrome and a lot of other browsers. So very much Chrome compatible, and you can install all the same extensions and things as you normally would in your Chrome browser. However, Brave takes a different approach to privacy and sharing of data, and is all about protecting user data rather than freely giving it to the likes of an organisation like Google to do what they like with. What's interesting is they're about to launch their first privacy-first search engine. So if you don't know this already, every time you search in Google, all that data is tracked back to you, whether you're logged into your Google account at the time or IP addressing. It is all pinned back to your activities on the internet, and links into all the other apps that you sign in with using your Gmail account. Anywhere where your email address is registered, they're building up a fingerprint of your activity. Hence why you get all the ads pop up in your feeds when you do a Google search for, fridges, and then for the next 3 months you're seeing fridges pop up in every stream you've got. So Brave's taking a different approach, and it will be interesting to see how they go with a privacy-first search engine and see what they can actually do and whether they can take it to Google. Just a point of interest, if you are after something that does give you more private searching already, then you might want to check out DuckDuckGo, which is a good search engine, but just doesn't keep track of all your search queries. Right, what else have we got on the go? Oh, okay, so if you were on the members video last night, the live Q&A, which was on Facebook, you would have seen me fairly rip into NFTs and the fact that I thought a lot of them were garbage, and I still believe a lot of them are garbage, in that there's no real scarcity in what a lot of people are selling at the moment. And I said that there are some instances where NFTs will be really good, and my comment was I don't think they've really found their home yet. When they do, it'll be something we haven't thought of yet, and it'll be, everyone will go, oh, that was obvious. We should have seen that. But it's always obvious in retrospect. So I said, if you're buying a JPEG for, I think I've seen one sell for $300,000 the other day, that's US dollars, for a piece of art, digital art, which I think is madness when you can just copy the screen and have that digital art yourself then. But something like what Kings of Leon are doing here, this is where you start to see the interesting things that can be done with NFTs. So firstly, they're releasing their album as an NFT. So I think that's pretty cool, given the way all the streaming services are going these days. So like a Spotify or iMusic or whatever, Apple Music or whatever it's called these days, where you don't, in a lot of cases, you don't actually own the music. You're just paying for the streaming service. So back in the good old days where you used to go and buy a record or a CD, you would hold and own that, and you could trade it between your friends, do what you like with it. You could copy that onto your MP3 player. Whereas these days, you're essentially hiring that service, and you don't ever own your music collection. Now, there's pros and cons. I think it's great. You get access to a broader range of music for a reasonable fee each month. But could you be spending that fee and buying an album every week or month, or whatever it is, and building up a collection that you own? So releasing an album as an NFT, is it going to now give you back the ownership of this digital information? So you could still stream if you like, and pay for a streaming service to access your information, but maybe also have things in your catalog that you own. So that might be interesting. And also what we're seeing along with the release of this album as an NFT is they might start to be able to do cool things like, where are we? Adding in a golden ticket. So you could sell an NFT. You could sell thousands of NFTs that are linked to the album for Kings of Leon, but you could have a select few, first 100 or whatever, that are linked to a ticket to a concert with VIP entry or something along those lines. So you're adding these extra things that add more value and are a single source of ownership for those NFTs. Another thing that may work is, a celebrity might be able to sell ownership in their brand, and then you've got provable ownership, and you might get access to them more on social media, or a stream of their revenue from their any work they do, things like that. So some cool things that can be done, and like I said, when we really see that the true use case for these come forward, it's going to be interesting to watch. So my advice at the moment is just be careful if you're buying digital JPEGs. I think they're going for ridiculous sums of money at the moment, but watch the space and see where it goes. Okay, moving right along, let's jump into some pricing action. That's Aiden. We don't need to see Aiden at this point. Okay, let's have a quick look at the fear and greed index. Still sitting in extreme greed. We've been there for a while. Could continue to remain there for most of the bull market. It would be hard to see us flip back into this zone over here while we're in a serious uptrend, unless there was some black swan type event which spooked either the traditional markets or the crypto market. So expect that this may be the new norm, and it's just a cautionary time. Like this is never a great time to be buying, but if the market stays exuberant, it can stay like this for quite some time. So just a point to be cautious about is if you're entering the market now, as the market progresses and we move into the later stages of this bull market, you just need to be really in tune with what's going on. So let's have a quick look at what's transpired. I've got a couple of really messy charts here, so let's see if I can clear up some of this now. And I've got so many little lines, we'll have to get rid of some of those later, I think, but we'll pick out a few of these now just to tidy this up a bit. All right, so I do like to do things live with you, and we have a look at the charts together and see what we can find out and see what's been happening. I think last week I may have went over how I grabbed a copy of these bars from the low to the high and placed them over from the low to the high here, and just had a look at where that's sat in terms of where we are in the current market and where we might head to. And it was interesting to see that lines up, assuming we do a similar thing, with about the 300k mark, which if we jump over to this chart, lines up with some of the stock to flow prediction models quite nicely. In fact, it's quite surprising how well it does line up. So we watched this is a copy of a previous cycle, and we watched it run up, rest exactly here, come down and have a little bit of a break, where if it pushes up again, that lines up with this 100k mark. Then the 90k mark is where I think is where you'll meet some pressure. Pulls back down again, then pushes up to go above this stock to flow and come back and rest on it again. So there's just like, that's uncanny how much that links in. This doesn't mean exactly what's going to happen, but hey, there's a lot of things pointing there that could be a sign. And where does that get us in terms of time frame? That is pretty amazing how that lines up with the end of the year, where we usually see these things play out. In December 16 seems to be a magic date. December 16, 17th seems to be a magic date in the past. So that is just really uncanny how it does line up. All right, so let's jump back and have a look at some more recent price action. I'm just going to remove this as well. It's a bit too much. And we'll get rid of some of this stuff. Okay, so let's, what can I switch on here? All right, so we've got our 200-day moving average. So that's the 200-day moving average is a big moving average to watch. And when we cross below that moving average, that's when we enter into a full-on reversal and bear market. So we're nowhere near doing that at this point in time. You can see we're still looking like we're in this zone here where we could move up quite comfortably for some time. Obviously that this is a lagging indicator, so it's not until you're very much in the midst of this big pullback that you actually get the confirmation on that lagging indicator. So you can get quicker indicators with the 100-day moving average. Okay, so we've got to watch those things all the time and see whether we cross below the 100, and that's a significant event if we do. And then, have I got a 50 here? Actually, there we go. I'm going to switch off that one, and we'll put on this one. So what we're looking at here is a 50-day in the green, 100-day in the blue, and 200-day in the red. And you can see when we're in a bull market, they line up so that you've got the green on top of the blue, blue on top of the red. And that's clearly where we sit now. Just get rid of that one. Clearly where we sit now, all the colours are all lined up. And when we start to see these moving indicators cross over, that's when we've got to be really, really cautious. So if we ever see the 50-day cross over the 100, that's a sign to be concerned. So we'd be keeping an eye out for that. If we ever see these 50 cross over the 200, that is everyone running for the exits. That's going into the bear market. Now, the reason why I bring this up is that this is all the stuff we were watching as we were emerging out of the bear market. But we've changed our focus now, and we look at a few different things because we're in a bull market. But it's always worth coming back and revisiting these trend lines just to see how we are actually tracking. So if we start to see the lines converge together, then that's when we need to pay a lot of close attention. So we'll come back and check on that from time to time, but at the moment things are looking pretty healthy. If we see this roll over and start to head down towards the blue, like we see here, so if we start to see a rollover, that's when we get concerned. Okay, I'm not concerned, but we need to start paying attention. All right, so and you can see that happened after the double top. So that was a good early warning indicator of, okay, trouble times ahead. We need to be really focused on what's going on. And so if you see that roll over there, okay, that's when everyone's going to be eyes on that, and that's what causes the downshift. Is if people are watching that and they see that, then it's a cascading effect down, and that's why you get the bear markets. So we'll be keeping a close eye on that and making sure that everything tracks along nicely. And what we don't want to do is exit too early. So if we exit down here thinking we're at the top and you leave all this on the table, not a good thing. So what we may do is we may get up here and you may be in huge profits and we still don't know that it's a top, and we lose this amount of profit here where we're holding because we might go into a reversal, which could continue, but if it does roll over, then we've got a decision point where we can go, look, something's changed. We're happy to take this loss because we think the market direction has changed. And we can lock in some gains there and ride out any volatility, and then we get to do it all again in the next cycle. And hopefully by the next cycle you'll be a lot wiser, and you will have already been through one of these market cycles, so you'll know exactly what's going on. Okay, so let's just quickly drill in and see what's happened on the Bitcoin pricing. And I'll just switch off a few of these. Oops, switch off. Done. All right. This yellow line's still my random line that I've drawn some time ago. Let's clear up a few of these. This is old news now. So we'll tidy up our chart. All right. So we were going along this trend line. We've come down to meet that trend line recently and bounced off of that. So it's still, we've still got to be paying attention now. Look, what we're now looking for is potentially this is a good opportunity. So we've come in and we've had a chance to wash off about 20-odd%. That was a good spot to buy in at, coming down on that channel if you're in acquisition mode. And now what we're looking for is to see this rise back up, and what we want to see is it lift above this previous high. So exactly what we've seen here, where we dipped down, we go sideways a little bit, push up, and then we get to the testing point, and we've got to see if we break through. And if we fail to break through, then that's when we need to pay a lot of attention, because that is a rollover. But if we get up to here again, so this point here at the, let's put a line there. So this point here is the one we're watching, so about the $57,000 mark. If we get up to that mark there and can punch through that again, then that's an indicator that we're probably going to continue to move up. I think we can quite comfortably get to the $90,000 mark before we see another retracement, just going back on the technicals. So it would make sense that we pushed up to this line here, and that's I've put that line there because we done a Fibonacci extension, which just sort of maps out some potential zones where price might move to. So I think 90's a good zone to look at. 100 is the psychological barrier, but technically that seems to be where I'd be watching, around the 90. And once again, if we can continue to hold that and push through, then we've got a good crack at 150 and beyond. Okay, now that would be pretty crazy to see that happen from here. That's still a power move, would be pretty phenomenal. Not saying that's going to happen by any stretch of the imagination. We're watching the market day to day and just seeing what's... we can only make our decisions based on what's presented at any point in time. Nice to have these predictions and to forecast where we think things may be going, but we're at the mercy of the markets as well. So we need to just keep an eye on the technicals and get a feel for what's going on. Fundamentally, it feels good. It feels like there's this institutional buy-in. Whether or not that can continue at this level, whether there's enough people waiting in the wings to push that forward, is yet to be seen. But the fact that we're seeing reports from JP Morgan suggest that they're looking at it. Are they ready? Well, maybe not. But how high does this thing need to go before they really start to see what they're missing out on? And what we could be seeing at the moment now is there could be people buying, and they just haven't told to the public yet either. So there could be a bit of that going on as well. But who knows what's going on behind closed doors? All we can do is read the tea leaves at the time and see if we can make some decisions based on that. But by and large, this has been a cracker year for crypto, not from price appreciation point of view, but purely just from awareness, adoption, and regulatory. Just haven't seen the headwinds that we have in previous years. All right. Let's have a look we'll have a quick touch at Ethereum. Anyone that's been listening to me knows that I'm still a little bit excited about Ethereum. It's been a bit of a stalwart over the last month or so with all the craziness of Binance, Polkadot, and ADA, Cardano, going crazy. So I think a little bit of the shine has gone off Ethereum and the attention's gone to these new sparkly objects in the space. But I don't think you should count Ethereum as down and out yet. We see it happen with Bitcoin so often, where people get into a malaise where they think it's just boring, it's going sideways, and then you see a 300% move. So, so I don't think you can just think Ethereum's resting on its laurels. I think there's some good things in the chart that have happened. Arguably, we've got a nice big, what they call a cup and handle happening here, where a nice big deep bowl. We've broken out of the top of the bowl, come back to test that previous level of resistance, which we never done on Bitcoin. So that was concerning for me and why I was urging caution on Bitcoin. Bitcoin just kept going though. So you can't always pick it. But technically, this is a really good thing that's happened. So it's bumped its head on this line, pushed through, come back, rested on the line as support, and is now starting to move off. So if we see Ethereum get up to this height again and punch through, that's I think that's going to be where Ethereum makes its stand in terms of a pricing point on the market. I find it odd that people are discounting the worth of Ethereum because it's expensive to transact on, when the only reason it is expensive to transact on is due to the level of adoption it's got. So yeah, it's not great to have fees like this. It harms adoption for sure, definitely. But the reason why those fees are like that is because it is actually getting used. It is the most active chain in the whole space, more active than Bitcoin. So and that's why I find it funny that it seems to, while a lot of things have, the value's gone into them, they've been a hype-driven value, Ethereum hasn't had that hype-driven value. So yeah, I'm just looking to see whether this, to me, it looks really solid. Like this looks like it's going places, but yeah, you just can't be too sure what's going to happen in this space. But it does look really solid from a technical point of view. I hope it does make a move, because it really does deserve a bit of the attention of what's going around. All these projects are building off the back of what Ethereum has achieved, and it's nothing short of astounding in terms of the DeFi space, what's been built out on Ethereum in the past 6 to 12 months. It's been blown me away, and I think it's exceeded a lot of people's expectations that have been in the space for a while. All right, I won't drone on too much. We'll leave it just at Ethereum and Bitcoin this week. We did touch on a raft of others in previous weeks. But suffice to say, I think Bitcoin and Ethereum have had a little bit of a pause, and we might be ready for those guys to get a bit more attention. Just one last thing, I'm not sure if I brought this up before. The market dominance on Bitcoin. So this is Bitcoin's dominance against everything else, and it's quite down at the moment historically. Simply not down to ridiculous lows by any stretch of the imagination, where it was down here in the peak of the ICO mania. But in this sort of channel where it tends to bounce, we can see a lot of the attention went out of Bitcoin and to the altcoins, and now we might be ready to see this Bitcoin get a bit more attention and push back up to these levels here. So that's the sort of cycles we see play out all the time here. You can just see that ebbs and flows between altcoins and Bitcoin, and we've been witnessing that for a number of months here in this channel that's sort of happening. So yeah, I don't know if it'll go any lower at the moment. That might be where it sort of forms a bottom here and pushes up from there. So all in all, I think that's a positive thing for Bitcoin, and good to see that it's got a bit of headway where it can move up against the rest of the altcoins now. All right, that's it. I'll draw it there to close there for now. Once again, we'll just finish off with a few pointers we'd like everyone to remember. Don't overinvest in the space. Only invest what you're comfortable investing. I know it's tempting when things are moving up at a rapid rate of knots and you feel like you're missing out. Don't overextend yourself in your financial situation to get a piece of the market. The market's not going anywhere. It'll be around for decades. So play safe and make sure you're not putting yourself in any financial risk. So only invest what you afford to really risk. Pay close attention to the market. You should be watching these every week, staying in tune with where we sit in the cycle. Do some more research on that as well. Go into look into Bitcoin and research some of these models and build up your knowledge in the space on where we think we can go and where we think we are at any point in time. Great to have our support, but we want you guys to be able to start making decisions yourself and forming opinions on the market yourself. And it's been really good to see some of the chats I've had with members, their knowledge. They've gone from just how do I move Bitcoin around to actually having really in-depth conversations with me about why they think the market's doing this and where they think it's going. So it's really good to see everyone is upskilling and getting really in tune with what's going on. So I urge you to continue to do that and then apply it to how you look after your portfolio. All right, that's it for me, folks. I'll catch you all in the next weekly update. Bye for now.